The single biggest cause of the current housing crisis is mortgage debt. So here to make sure that you don't fall into all the mess is real estate expert and author of The Skinny on the Housing Crisis, Jim Randall. Welcome back, Jim. Good to see you. Your books are very popular. You've got the stick figures in here. You help us understand. But you go around the country speaking to people and educating people on, the whole process, right?
I do.
Okay, now let's talk about the mortgage products that are best for home buyers. Is there a general rule of thumb that we need to follow?
Well, probably the rule of thumb is that no one size fits all, and that people have to assess what would be best for them when they understand all the different variables.
Right, and speaking of different variables, there's a lot of different loans out there. You've got the adjustable loans, the fixed rate loans. It can get pretty confusing with all the different terminology.
It gets very confusing, and people just need to understand. It's really simple when you pare down kind of the frill, but the two types of loans, adjustable, fixed rate, and that even the adjustable is a little bit of a misnomer. It's really how long you want to pay for a fixed rate. In other words, an adjustable loan can have a fixed rate for a year, for 3 years, for 5 years, and that's going to be a little less expensive than if you want a 15 or 30-year fixed rate, what's commonly called fixed rate loans.
Right, you got to go a little deeper with your research when it comes to that, not just take what they, put out there in the beginning.
That's right.
When you're deciding which loan works best for you, what criteria should people really look at? Things that we sometimes forget.
Yeah, I think there are two. One, you have to make an assessment. How risk adverse are you? If you're the kind of person who's going to lose sleep at night worrying about interest rates, well, then take the long-term fixed rate loan. You're going to pay more for it, but at least you're going to sleep at night.
Right.
The most important criteria, however, might be an assessment as to how long you're going to have that loan. If you're going to be in a house for a year or two, then a 3-year, what's called ARM, or a 5-year ARM, it makes sense. And it doesn't make sense to get the 30-year because you're paying for years that you're not going to have that loan.
Exactly.
So it's really make a conservative guess as to how long you're going to have that loan, and then go for either the adjustable or the long-term fixed rate.
When we're talking about the mortgage world today, what do you see are the biggest problems going on, biggest changes and biggest problems? And do you think the government has done enough, or should they do a little less in terms of helping out the homeowners?
Well, the biggest single problem is that people thought they were going to have a mortgage, say, for only a year or two. They were going to buy a house, they were going to flip it, they were going to trade up, they were going to relocate. The problem is with the housing crisis, prices falling, people aren't able to sell the way they thought they would, and they're not able to refinance the way they thought they would. So these adjustable rate loans, they thought they'd be able to refinance or sell in a year or two. They're now lingering, and they're sticking with rates that are now spiking upwards. What the government's doing, the government is doing all it can, as best I can tell, to stop this foreclosure craziness that's going on. It's a cycle. As people get their home foreclosed, the bank puts it on the market, that drops prices, more people then lose equity.
It's a ripple effect.
And it's just a downward spiral.
Yeah. Okay, now in terms of the lender world, do you think it's going to stabilize and stabilize soon, or
I sure
are we
hope
in this
so.
for a while?
I sure hope so. Those of us in the real estate world, we're getting a little dizzy from all this.
Right.
I think the government, I personally have been writing about some of the things that the Obama administration is doing, and I think some of the steps that they're taking are going to encourage lenders to start lending again.
Okay, now the prices have to stop falling in
Yes.
order for that to happen too.
Yes.
Jim Randall, thank you so much for coming back. We appreciate it. And if you guys want to get a better understanding of how the housing market operates, you can pick up Jim's book. I love it. It's called The Skinny on the Housing Crisis, and it's available now.